So to start off with, this video series is actually my journey going from 2000, well, really 1950 and 71 cents to 100,000. And this is actually a voiceover of this first video. It was a live stream, but good old me forgot to unmute the mic. So all that audio was gone, or I guess not even recorded, huh? But it gives me some time while I adjust the charts here to just kind of talk about my process. Basically, every night I start around midnight, and you had got a glimpse of my rules there that I follow, usually making about 3 trades a day. Following the pitchforks and bouncing between the S&P, oil, gold, and the treasury, the 30-year treasury to be exact. And so here I am trying to fine-tune the pattern of oil to see what I should be doing. And I guess the format for the videos going forward will be my live thoughts and reactions. It's just, again, since I lost the audio, this is what we're doing for this first part. So yeah, here I am just adjusting. I see in the last few days there has been a downward pattern, but I do think that it's being overdone and should start going upwards. Well, I guess it already had, but I was saying it would go to about 105. Then I was trying to determine whether at that point when it got to 105 if I should short it or not. And here I'm just color coding my pitchforks, which the green pitchfork is a multi-month pattern. The blue is multi-week. The orange is multi-day, and then the purple is just within that orange, usually just within that same day. And then lastly, if there's one within the purple, I just leave it white. And that's not really one that I follow for trades, just for me to have better visual representation of the price action. Now here I'm going over to showing the rules that I've made for myself, which essentially is just start at midnight, wait for the London Open, which is 2 a.m. Central Time here, where I am. Right there I'm saying the major move that happens from the London Open usually occurs 1 hour, well, finishes in its entirety usually an hour after that time frame. And I say usually, and in parentheses there, it says the rule is more of like a guideline, just because there was a moment where I had a position and it was 45 minutes in, and I was like, well, I can wait an extra 15 minutes, and it ended up going against me. So yeah, I made 3 trades, one at the London, one in between the London and the New York Open, and then one at the New York Open. It's not always exact. I might add a trade or not do a trade, but it's usually about that. Now here I'm looking at the Dow and showing that it looks like it's going to trend downwards a bit before going higher. Then I look at what's coming up, which is the CPI numbers, which I expected would make it move quite a bit. In this scenario that I was playing out in my head, I was imagining the London Open would push it down, it would trend upwards, and then finally reach the height of the move after the CPI number came out. Now here I am looking at the gold chart, and I'm showing that here at the 1830 level, it is definitely at the bottom. And I'm just color coding that pitchfork there and kind of just showing that, yeah, it is at the bottom here at the 1830 level and will be heading upwards. Now, gold and oil only have Friday expiration contracts, and today is Wednesday. And for that fact, I was considering, well, what if I short the 30-year Treasury or the S&P, since they have expiring contracts? That would be better opportunities profit-wise than buying gold or oil. So right here, I'm looking at the 30-year Treasury and determining that if it gets to the 139 handle, 139 and a half actually, after I adjust it here in a sec, if the price were to get to that point, I would short it if it gave me the chance. Likewise, I think right after I look at this and determine that, I started looking at the S&P and determining that the 39.90 level at that moment in time would be the place I would consider buying calls. Now the strikes that I choose, since I'm doing the expiration days, I tend to either buy at the money or in the money strikes, because time decay really eats at your position. Even if you're right about the underlying movement, time decay just really eats at you. So it's always better to have those closer, either at the money or in the money strikes, just to kind of insulate yourself from that. But yeah, so I was going over the S&P after, again, adjusting the pitchfork once again to kind of not be all wonky. Let's see, there we go. And you'll see as I make the pitchforks, yes, they are hand-drawn by me. No, they don't match up perfectly. I have to make a game time decisions on whether to leave certain candlesticks in or out of the pitchfork. Usually I leave them out if it's a particular day where a substantial news event happened that kind of made the price really spike in a direction before coming back and really had no bearing on the actual movement. But now here we skip ahead forward in time, and now the 30-year Treasury is pretty much at the 139.5 handle. I showed that the S&P did scoop down a bit to closer to 4,000. I believe it got to like 4,004, 4,005, but didn't quite get down to that 39.90 level that I wanted. So here now I'm looking at the 30-year put options, and specifically the 139.5s. Those are the ones I'm going to want to buy. And so here I'm just kind of looking at the price section of the option to see, all right, well, here at 11.12 or 139.11, 139.12, the spread is 37.40. And I saw that it got up to 139.18. So I'm thinking, yeah, I probably won't get the best price, but I think getting about 36 would be decent. So after kind of looking, because I see it's at 12.13, and yeah, it's steadily staying at 36, 39. I figure 36 is pretty safe of an option price. There is option price calculators. I believe the CME has one. Don't ask me how to actually use it, because I don't know. I mess around with it every once in a while, but normally I just kind of look at where the price is relative to the underlying asset, and when I feel like it's time to buy, I just kind of go with whatever price that is. as long as the spread's not too wide. But yeah, so I placed the order, and I'm just trying to determine exactly, like, should I wait until it gets higher when it reaches that peak again? But normally when something like this happens and it's spiked and reached that peak, I would more than likely just say, you know what, I'd rather get into the trade than anything else. And here I'm showing the Dow that it, in fact, did kind of scoop down, but not as low as I wanted it, and started going upwards. Yeah, so now it's just a bit of waiting as I wait for it. Essentially, I need it to go to 139.14, 139.15 for the trade to go through. And this is actually a time where I'm also trying to determine, should I go ahead and cancel that order? Because now I see it's what, 139.10, 139.09. And the S&P is now going up just like I knew it would. So I'm trying to determine, did I miss it? Should I abandon this 30-year treasury trade, go with the S&P? Really trying to figure that out right now. And this is really a judgment call. There are going to be times where you feel, actually right here, I see that I'm only using 1100 of the 1950. So I go ahead and add an extra contract here to make it 3 that I'm buying. But yeah, as far as like wanting to know how I determine which one to go into, it's just based on experience. And even then, it's like I'm wrong half the time on that, because I'll pick one and say, oh yeah, this is what's going to be moving the most. Oh, it turns out the S&P was a better choice. So it really just depends on what's going on. I will say, if there's any kind of market moving scheduled event, you might want to go to one that's directly related to whatever it is. So in the instance of today with the CPI, well, it both affects the treasury yields and the market as a whole because of what the Federal Reserve is doing and just the whole market environment in general. But there's easy ones, like obviously when the crude oil inventories come out, that really affects the oil prices. Well, sometimes. But again, like if you know that that's coming up and that's very specific to oil, you could gear towards, well, if it's a toss-up between oil and something else, maybe you might want to go with oil, seeing how it has a news event coming up. But here I am still just waiting. As you can see over there in the left-hand side where the watch list is, the S&P is slowly ticking up. Meanwhile, the Treasury is just kind of there. You see the Dow also spiking. And at this point, I was feeling a bit frustrated as far as missing that opportunity. Although, as I said, the entry point was the 39.90, and S&P wise didn't come close to that. So not really much I could have done on that front. So I'm now just still waiting for that entry point. I do skip between time to only go essentially when I get in and out of trades. It's just in this case I wanted to show the exact feeling of what it is when you're waiting for a fill and you're stuck between a few different trade ideas that you could be doing. But I decided to stick with the Treasury trade now I'm just kind of waiting for that fill to happen, which is the most agonizing feeling ever, when you just want it to execute. You're just waiting there, and you're just like, come on, just get to where I need you to go. Well, I guess it's not the most agonizing. The most agonizing is when you're pretty down on a position and just hoping that it comes back. But in this case, yeah, you just kind of having no money in play right now while I see things going on. It's really frustrating. So I take a look at the S&P again, and as I said, it's spiking. I'm still just waiting for the 30-year to reach. Every time it gets to, is it about to get to 13? I'll pull it up and be like, come on, you're so close. You are so close. Just get up a little more. It's so funny. Yeah, here it is. I think it's right at this moment. It kind of plops up to 14, and then I think this is where I get my fill. Yeah, here it is. So I'm like, oh, come on, it is right there. 13, 14, just give me the trade. Give me my options. You know you want to. Oh, you so want to. And now? Nope. No, well. I was going to point out that it's funny that a bot entered into my chat, and because I wasn't paying attention, it covered up the clock and date and time at the bottom. But there we go. We got the fill at 36. You see the spread is at 34.38. So effectively shorting it at 139.14. And I'm like, okay, that's pretty decent, especially for where I see it on the chart. And I show here that our option value is about 1,700. And I mean, that loss of $11 right now is mainly just the commission. But I'm like, all right, well, I'm gonna skip forward in time. So now this is after the CPI number came out. So it's just after 7:30, 7:33. CPI comes out. It's higher than expected. Markets are going down. Everything's going crazy. Haywire. Everything's happening. So I'm trying to see, all right, what's going on? Do I need to sell it now? Do I hold it for a little bit? I see it spiked and it's starting to come up again. So I look at the Dow. I'm like, did it break any patterns? Okay, it did. So I definitely reached that point where I was saying it started coming down. And now you can see that position got us about 2,000. So I'm like, all right, yeah, I'm willing to take that. I don't even care what price I get. 125, that's good. As a matter of fact, I was looking for the thing to actually adjust it. I was going to check real quick to see, and then it got filled. So I was like, okay, well, I'm okay with that. So final tally, 2,462 for 44.23.97 as our net lick. So now I'm looking like, okay, should I buy calls now? Should I just leave that alone? I'm looking at the S&P. Is this where the better trade is at? So I'm looking. I'm like, all right, here we are. Adjusting it. And it looks like the 39.70 level is right where I should buy those calls. So I'm just going to wait until then. That does mean that I could have held the treasury puts longer, but as I said, I'd rather have just gotten out and just kind of waited than anything else. So now I'm just kind of looking at all the other markets. I think I pull up the Dow once again to kind of look at the pattern just to make sure that I'm seeing what I'm seeing, right? I pull up the option chain for the S&P to kind of get an idea of which strike price I'm going to get. And as I was talking about buying the at the money or in the money puts, strikes, whether it's calls or puts. In this case, I wanted to buy calls, so I was looking at either the 3970s or the 3965s. And I was just waiting for the underlying S&P price to get to that 3970 level. Then I was going to pull the trigger. I'm just kind of waiting. And I'm figuring, because also in my rules, you'll see how I specifically point out the CPI. And in my experience, it'll have a heavy movement in one direction or another, could spike, and then rapidly go in the other direction after a while. It usually starts happening after 10-15 minutes. Not always the case, but sometimes. And so I was expecting a quick reversal here. So I was like, okay, well, it's almost at my price point. And when that happens, I'll pull the trigger on those calls. Again, buying the at the money calls for fighting time decay. Now here, since the pitchfork was kind of broken, I fixed it to be more accurate. And as I'm adjusting it, I'm like, okay, yeah, you definitely see it going lower. So when it reaches that point, I will pull the trigger. And sure enough, right after that starts kind of pulsing downwards, and I'm like, oh, okay, well, how about that? So there it goes. And in the case of when it's getting close to the pitchforks, I will just go ahead and say, you know what, I'm willing to buy them now, because it'll spike pretty quickly sometimes and you won't have a chance to get the price at the very bottom. So I'd rather just put an order in, wait for it to get executed, bam, okay. So now we got the 3965s at 36.25 price. And I'm feeling good about it. Like I said, knowing what I know about the CPI and everything, and I still have the actual New York Open in about an hour, I'm like, yeah, it should be fine. Here it is at, 39, 68, 67. It does push past a little bit, but I'm like, that's fine. I'm not too worried. I knew I entered a bit early, so I'm not worried about it being down a bit here. But what actually ends up happening, it's going to do a time skip here in a second, so you're not going to see it happen in real time. It actually broke down all the way to 39.47 or 43, somewhere around there. So it broke past the 60s and the 50s, and yeah, that wasn't a good time. But seeing as where it was in the pattern, I wasn't too worried about it. I did adjust here, thinking, oh, well, it's just a little lower. Here, let me adjust it a bit. There we go. See, good as new. Bam. It's fine. It's even respecting that level. So I was like, okay, yeah. Especially because it's way down here, I feel good about having calls in this instance. And I think the time skip is about to happen after I just kind of zoom in a little bit. I'm like, all right, well, now it's just time to wait. So now the time skip happens, and as I said, it did go down quite a bit past where it was, but we are up on the position a bit, about $500-600 to push us closer to 5,000. That bot spam chat is still blocking the clock. It is funny how much I changed the UI of the stream as it goes on. But here I am looking. The New York Open is about to happen in about 5 minutes. And I am just kind of trying to see, like, okay, what's going on? What new patterns do I need to find? Is there something that I need to do? But from what it's looking like, our position is still pretty good. Again, we have the 39.65 calls, and the current price is 39.85. So I'm feeling pretty good about the chances of it reaching the upper part of the pattern and getting to that point that I'm pointing at right there. So I'm kind of feeling like, yeah, once the New York Open happens, it should give that the momentum it needs to push towards there. I do look ahead to kind of see if anything of the Fed members are speaking, but that's not happening until Friday. And so for today, I figure, well, nothing else. I'm looking at the Treasury again just to kind of see. And again, it showed that I definitely could have held it for way longer, but I'm okay with the decision I made. It's fine, because I still have made at this point a little more than double, and so that's good. I'm fine with that. So now I'm just trying to wait for this open, and you see I'm pointing like, yeah, I think it's going to get to that 40 level and see if it breaks through that, and if it does, then it's off to the races. But first we just need to get there. And I look at oil, and it indeed got to about that 105 level, 104.5. But I am worried that it might break that. So I was like, well, I wouldn't short it at this moment in time, just kind of keep an eye on it. And I think I just kind of look at everything else. Yeah, I look at what gold did, which did end up going to the 1850 level, then coming back down, and then spiking up again. But again, and I think I cut this part out, but I was explaining how, like, I looked at the option price of gold for the contract that expired on Friday and saw that it just wasn't worth, even if it did go up $20, still wasn't worth the same amount of opportunity cost that it would have been had I used the expiring contracts like I did. So here I am just kind of waiting, just looking at different things. I'm like, oh yeah, Teladoc. I think that 27 level would be something to buy. I was looking at ARK, and I was like, oh, well, it kind of broke some patterns here, but let me readjust it. Because again, knowing what I know about the overall markets and where they are, I'm like, well, this should be relatively close to the bottom of where it stands. So as I see that it's trying to open around 38, 39, I'm like, yeah, that seems about right. The 38, 37 level, not quite 36, that seems too low, but definitely around there would be something that I would consider. So I think I go back to the S&P just to look. I'm just kind of waiting And of course, the clock is still blocked. But you can tell right when the New York opens, because bam, all of a sudden over there on the watch list, everything is moving everywhere. Now here we go, off to the races. Starts moving everywhere, and you see, okay, we're up 700. Cool. All right. And I'm trying to think like, all right, is it getting stuck here? It is in the middle of the pattern. That is sometimes a point of resistance. Let me look at the Dow to see. And I'm like, oh yeah, like it's having some issues here. I don't know. Should I take the profit here? So I'm trying to see I'm pointing out, yeah, it's right there by the resistance level. It could go back down. And so I'm trying to make that decision. And again, how do I make this decision? It's game time, up to your intuition. You just gotta know what's best for you. In this case, I was like, you know what? Even if it does go back down, I'm good because I have the 39.65s, and look at that, it's getting back up to the 90s now. And so I'm like, all right, but I'm still keeping an eye out for the Dow to see what's going on. I'm looking at the S&P now. It's pushing. It's at 4,000 now, and I'm like, oh, okay, there we go. So I'm like, yeah, it definitely pushed past the resistance of the middle there, and it should be going to 440, 40. Not too long. You see we're up to almost 6,000 now. So I'm like, oh yeah, we're gonna be breezing. It's gonna go to 40. Then I buy some puts, bam, call it a day. And I'm just kind of looking like, oh yeah, it should be going up there. It's pushing pretty easily. And then I start to notice that there is an upward trend, and that spike is right where the resistance is. And I'm looking at it and I'm like, I don't know. Because I'm like, yeah, it's going to 42. But I'm looking at it and I'm like, man, it's really struggling at those even numbers, those round numbers. And so I'm looking and I'm starting to see that upward pattern where those two wicks are. And you see me like, uh-oh. And there it is. I'm drawing it out. And as I'm drawing it, it's starting to come down. And I'm like, yeah. So I go look at the Dow, and I'm like, is that what I'm seeing? And I'm like, oh no, I see it there too. Now this is where I guess I could have sold right then and there. But then now it's in the 80s again, and I'm like, you know what? Just a few moments ago, I was fine holding it no matter what was about to happen because I have the 65s. I'm not going to let this deter me from, yeah, I was pointing out, yeah, I could go back to the 60s, but I know it's going to go up there, so I'm okay. And of course, what ends up happening, it goes right down there. As it starts to just go, it's like, okay, well, obviously, a few moments ago, selling it and having 6,000 was better than not. I don't know if I show it or not, but I don't even know if I'm positive anymore at this point. I do add the net lick of the account onto the screen after a while as an overlay, but I haven't done it at this point yet. So I'm just waiting for it to go down even more, and as that's happening, I'm just kind of looking around. I'm looking at oil to see what's going on. And I see that it broke above the 104 level. So I'm like, oh yeah, it's probably going to go to 110. And really, I'm just trying to distract myself because now the S&P is in the 70s. So I'm just kind of looking. I'm going. And I think a time skip is coming up because I'm just like, yeah, looking at it, okay, we're barely positive. We're at 4,600. I'm looking at it, it's in the 70s. I'll pull it up. And I'm looking at the treasury now, pointing out that, yeah, I sold it there and I could have held it. But I bought the S&P roughly around there, came down, and now, even though it's coming down now, it should bounce up to that 40-40 level, even though it's doing this right here, following this short-term pattern. Sure enough, it did get into the 60s. It's at 68. And I'm pretty sure this is where the time skip comes in, because I'm like, all right, well, I have to wait around for this. And it wasn't until a while later. It might have started going back up before the time skip, I don't remember. But yeah, now I'm negative 300. So we're just above 4. Then it starts to make a comeback, and I'm like, all right, well, hopefully that's the start of something good. It still needs to get past that 4,000 level before I know it's actually going to that 40-40. So now I'm just trying to see where the stochastics are on the pitchfork in the different time frames. I think I'm pointing like, yeah, if it breaks through 40-40, it could go all the way to 4,200. Oh wait, no, that was, I was pointing out that I had bought the 4,200 calls last time. And even though it got to 4,200, the time decay actually ate into that position pretty badly. So now I'm just waiting. I'm gonna look at the smaller time frame, and it's starting to get closer to the 80s again. So I'm like, oh, it's making a comeback. I wish I didn't block the time so I could see exactly what time was left. But it's right in the middle of that smaller pattern there. And it's going to be following that until it breaks through on either side. So it starts getting momentum to the upside. And I want to check the Dow to see where it's at in its pattern, which is right there. And I was like, okay, well, it's fine. I just needed to break through that, and I'm so emphatic about it going to 40-40. I'm like, it just needs to get there. It just needs to get there. So now we have a time skip, and it in fact did get there. I finally moved the damn chat out of the way, so now you can see it's almost 9:30. I sold the calls, and we're at 8,449 with about 6,500 in profit. So now I'm like, okay, well, I'm gonna buy these puts here while the market the underlying S&P is at 4037-ish. And I'm trying to mess with the overlay to see like exactly where it's best, because you see it got in the way of me adjusting the price there, because I saw it spike and I was like, you know what, yeah, it's starting to come down. Let me look at the price. I'm like, yeah, I think 29 is good. Oh no, actually I move it to 30. And I'm like, 30 is good. 30 should be fine. Because I'm like, yeah, it's 30, 30 and a half. Yeah, I'm okay. So I leave it at 30. And I think I get the fill right there. And I'm like, oh wait, I still have 9. But I'm like, yeah, what I'll do, I'll look at the S&P. It still looks like it could get up to like 40, 48 technically. So I was like, if that happens, I'll buy some out of the money calls with that last 900 just because. But yeah, I was pointing that out right there where I was like, yeah, if it gets to there, I'll use that 950 to buy some out of the money put options and just kind of write it all the way down. And in this point, again, it's almost 9:30. One of the rules that I have is that I'd be done by lunchtime, about 12:30 Central. But here I'm looking at oil. I'm like, all right, well, it definitely did break to the upside, but it's not quite getting there. And I'm looking at gold, and it was just following that same little pattern it was earlier in the morning. So I go back to the S&P, and I'm like, all right, yeah, we're a little negative here, but again, unless it gets to closer to 40, 50, I'm just gonna kind of chill out and not really do anything. Then I think there is going to be a time skip, and there's going to be some suggestions in the chat as to where I should put different things, how I should have like the kind of interface over the charts and how it should look and stuff like that. Yeah, because now it's completely different. Now you can see that we are in fact pretty negative, down from 8,000 to about 6,000, as it pushed pretty much from when it was reaching down, and we had at its peak about 12,000 to now being half that roughly, about an hour later. So this is at 10:45. Now we go to 11:30, which point I just sold the position. So it is at $15,523.68 from $1,950 in a single trading day. And I said, yeah, it probably could go down further, but I'm okay with that because